Welcome, everyone. My name is Dustin Robinson, and I'm your host for Investor Hotseat, where we ask the tough questions that CEOs need to be prepared to answer. Since this show is about investing, a couple quick disclaimers. We are not soliciting investment on this show, and we encourage you to read the full terms and conditions on the psychedelicinvest.com website. The agenda for each episode is that we have a 5-minute presentation from a CEO that will be followed by around a 30 to 35 minute Q&A by me. And then we'll reserve 5 to 10 minutes at the end to answer the audience's questions. So if anyone has any questions whatsoever, just drop them in the comments box and we will get to them at the end. This episode is a little different from some of our previous episodes because we're taking a little detour into the psychedelic space. But this particular company does have quite a bit of crossover and things that could apply in the psychedelic space. So excited to have this company on Investor Hotseat and introduce them to our Psychedelic Invest audience. So without further ado, I'd like to welcome Jeffrey Finkle, the CEO of Arcview. Jeff, I'm going to pass it to you for your presentation. Then we'll jump into the Q&A. You have 5 minutes and you're on the clock.
Great. Thank you, Dustin. We have a long history. So let me just try to frame it for you. I'm not going to use slides. I'm just going to sort of speak to our history and how we've evolved as a company. So the Arcview Group was founded in 2010 by two cannabis luminaries, Troy Dayton and Steve D'Angelo. For those of you who are following the space, you probably do know Steve D'Angelo. He's the guy in the pork pie hat and the braids, and largely thought of to be the father of the legal cannabis movement. Arcview began really with Troy and Steve through the lens of advocacy. So it was all about freeing the plant and moving forward regulatory change. But I think Troy and Steve quickly realized that the best way in which to do that was to nurture the economic growth of the industry. So they did two things. They built an investor network at sometimes 400 or 500 strong of individual high net worth investors that were interested in the space. And then they created investor forums where those investors, as part of a membership model, could see companies that they might want to fund. Each year, I think between 2010 and 2019, they produced 5 investor forums a year. And I would say some $300 million found its way to over 250 companies at Arcview events. And that's pretty much what the business was from 2010 to 2019. Very big brand being built, really synonymous with investing in cannabis. Huge, huge impact to the cannabis industry, but not the perfect business model for a business. Why? It was not really scalable. It was essentially sponsorship revenue at events and flat fees to become an investor member that they would charge investors. In 2019, one of the growth capital funds in the cannabis industry, Entourage Effect Capital, came in. And the idea is to take that great brand and participate in the transaction. So there were 4 things that Entourage and Arcview did. This isn't in particular order, but it was over a 12-month period. We started a broker-dealer where we created Arcview Capital in partnership with a couple of ex-FINRA guys, so very strong on the regulatory side, to do investment banking functions, crowdfunding, Reg D, Reg A raises, and M&A advisory. We created Arcview Ventures, which is a principal investing group where we operate what we call a collective fund. It is essentially a member-managed venture fund, meaning that all of the LPs are part of the decision-making body, and they vote on which deal we do, and then they lend their Rolodex in support of the company funded. Arcview Ventures also puts together SPVs and invests a small seed allocation out of the Entourage fund. So that's the second leg, Arcview Capital, Arcview Ventures. And then the third leg of the school is Arcview Management Consulting. They do cannabis license pursuit and brand expansion and SOPs for operators. Lastly, we took the event business out of Arcview proper and created a joint venture with a private equity funded event logistics company to produce Arcview investor forums like we had done all pre-COVID under license. So they do all the financing of those events. They do the logistics, they do the production, and we help them on content. What should the panels be about? What topics are topical for listeners and attendees today? So that's what we are. We're a holding company that owns a significant, a healthy minority interest in capital and a majority interest in all of those other subsidiaries and a 50-50 joint venture with the production company. And we are taking this model, developing it further, and we're now sort of in the preface of bringing it into psychedelics, which is part of the new mandate for the company going forward.
Awesome. Well, you kept it under 5 minutes. Great to see you, Jeff.
And, you have a clock running.
You did a great job. I mean, you guys are doing so much. So it was impressive that you were able to kind of give a good summary overall. I just want to start off by just thanking you for all the stuff that you and the Arcview team has done for the industry. You guys have been truly pioneers. You guys were one of the first names I knew in the cannabis industry. So thank you for all the work you guys have been doing.
Thanks.
So you did a really good job of talking about the history of Arcview, and I'm sure a lot of our viewers weren't aware of the history. But as an investor, I always like to know a little bit more about the inspiration of some of the executive leaders like yourself. So what actually inspired you to get involved in the industry, and how did this ultimately lead you to working with Arcview?
So I spent the first 18 years of my career as an entrepreneur in the tech industry. I started a company. It was a precursor to CD-ROMs, which if some of your listeners remember, you used to have on your computer, but you don't anymore. It was a new storage device and a way in which to write data onto computers that could never be erased or compromised. I ended up through a series of acquisitions at a large publicly traded company called Cheyenne Software, where I was an executive. And then I became a venture investor. I started a venture capital fund focused on tech in New York called Odeon Capital Partners. It was a $115 million fund. And I ran that for 10 years. After that, I became an angel investor and a consultant. And it was at that point, practicing that craft in tech, that I came across the cannabis industry. And I was really kind of looking for a new sector with which to practice my craft. The tech industry, a little bit before AI and blockchain and virtual reality, felt a little flat. And I was really looking for a different industry. And I came across cannabis and thought, this is a perfect platform to build a fund, one of these member managed funds like I had done in tech before, but for the cannabis industry, because cannabis is a little more complicated and you want expertise at the table. So I'm not going to tell you it was because there was a health, God willing, a health issue in the family or any sort of notion about freeing the plant. For me, it was strictly, I think there's a real economic opportunity. But once I discovered that, the whole mission of the industry, all of sort of the social justice around the industry is what really drew me in and became a big part of, sort of why I was attracted.
Got it. And, it's always good for a team to be well-rounded. Obviously, your founders, I think, were mainly driven by that concept of freeing the plant. And now they got you who really understands how to kind of drive the economics, which is always important. At the end of the day, you could have a noble cause, but if you can't build a sustainable business, you can only go so far. So I'm curious, those founders, Steve D'Angelo, are these founders still involved in the company, or what is their role?
They are both shareholders. And Troy does have the right to a seat on the board. He's got somebody else that he's appointed at that seat at the moment. But yes, they are. In fact, our first post-COVID investor summit was October 19th in New York City, and Troy and Steve were both there. They both did keynotes in the morning. It was so great to see them. We kind of built it more as a little bit like a reunion event to bring them back, and their contribution to that event, and as you well know, the industry is just immeasurable. So yeah, they're involved, but not day to day, but sort of in spirit and in support.
Absolutely. Yeah. Those two guys, for our viewers that don't know, absolute pioneers in the industry. So just them showing up to events, it's going to be a good event. So that's great. So I want to jump into, the first way that I got to know Arcview was through your events. So I want to first start off talking a little bit about the events. So how many events do you guys do a year? What should someone expect if they attend one of your events? And what's kind of your revenue model? I know you said before it was strictly based on sponsorships. I don't know if that's still the model here.
Okay, so that's a compound question. So I'm going to try to
There-
unpack
there's
that properly before I forget. So I'll start with the latest. The business model. Remember, this is just one of our 5 parts of our business. Is exactly that. It is sponsorship and attendee fees, but it also really serves as top of the funnel to drive opportunity to the other business units. Portfolio companies for ventures, consulting clients for consulting, and potential mandates for the broker-dealer business. We would produce historically 4 to 5 investor summits a year. That stopped. I think the last one we did was California in March of 20, right? Literally a week before the world shut down with COVID. We pivoted and did about 90 webinars through the COVID period. We're still producing maybe one a month now. But what can you expect at our event? I would say, it's really availing yourself of the ecosystem. I would say this: when we came back to live events, we had to reestablish goals, right? We didn't want to just repeat the past. So we wanted to make sure that we were sort of spot on for what the industry needed. So we established some goals, right? The first goal was to honor our existing community, all the legacy Arc viewers that came to the event that built this industry, but extend that to new people. Because let's think about it. Over that 3-year period, with the Midwest coming online, with the tri-state area just about to come online, the industry has grown quite a bit, and there's a lot of new can of curious that want to figure out how to play as operators or investors. So it's about extending our community, but honoring our old one. We also at our events want to deliver nuanced content. We want it to be meaningful and interesting rather than just sort of rote and obvious. It can't be kind of 101 content like, what are MSOs doing? I think we succeeded in New York. We hope to succeed in Miami. We want to be about investors, operators, and entrepreneurs. So if you're an entrepreneur, an operator, or you're an investor, this has to kind of be focused on you, whether it's big cannabis investors and operators or more emerging ones. And then lastly, again, this is a pillar, right? We want to be able to support diversity and justice to those wrongly affected on the decades long war on drugs. So we want to be inclusive. Our New York event was super inclusive. Earlier Arc events, I think, were just a lot of rich white guys, quite frankly. But noticeably in New York, there was a real representation from legacy operators and I would say new blood that's interested in the industry. But I would say, look, people coming to the event, really, it's about learning. And it's about making connections. We want people, you should come to our event. You should make at least 2 friends and 5 acquaintances.
That's great, and I know you guys have an event coming up, and I'm excited to attend in Miami just in a couple weeks. So I want to talk about, you guys have a whole menu of different investment opportunities for people interested in investing into cannabis. You talked about the fund, crowdfunding. How do you kind of bucket these different investment opportunities, and how does an investor kind of decide which type of vehicle they want to be involved in?
Let's start with what we offer in the venture group. So in the venture group, we have this great, as I tried to explain, this member managed fund. I know we're going to talk about that maybe a little bit later, but that's an opportunity for investors that want to be active, that want to learn, and want a front seat at the table. We'll talk about that more in detail. We, in that group, also structure a lot of SPVs, special purpose vehicles, for individual investors, where we're presenting one opportunity at a time, and they might connect with that opportunity and want to fund it. And that's sort of the activity. And we're also probably in 2020, they're going to put together a seed fund for passive LPs that want to sort of participate in cannabis, but don't want to go to meetings and do any work. In the broker dealer side, for investors, I would say the opportunity is crowdfunding, right? So we have a crowdfunding site that has to be on the regulated side of the business because it's governed under SEC, under Reg CF for crowdfunding. So it has to live there. And that really allows people to invest a small amount of money. If you're not an accredited investor, you want to put $500 or $1,000 or $5,000 into an opportunity, then crowdfunding is the right place to look for opportunities. Also in the broker dealer, is they'll be presenting companies that are doing traditional financings. The lingo is Reg D, Regulation D in the Securities Act. where it comes to just sort of raising their traditional round of capital. Our capital group represents companies from time to time on Reg D financings. So those are the ways in which, and look, if you want to just do it on your own and be a go-it-aloner, come to the events and meet companies. But that's really the opportunity. What we found is that member managed funds sort of is a way in which for individual investors that want to be involved, they want to learn, but they want a safety net, right? They want wisdom of an informed crowd is often a good option.
That's great. And so, I think I want to talk a little bit more about the crowdfunding and the collective fund, because these are really pretty innovative investing vehicles that you guys have kind of created. And so I want the viewers to have a better understanding. So Reg D is kind of the normal accredited investor way of raising capital. It's what probably most investors are familiar with. But then you have this option for crowdfunding. And so I know this is relatively new for you guys, kind of adding crowdfunding to what you're doing. And I've had a huge interest in crowdfunding over the past 12 months. I've been doing a lot of research. The parent company of psychedelicinvest.com, Nucleus, is actually currently doing crowdfunding because we want our audience to become our investors. We want our investors to become our audience. So I'd love for you to give a little bit more background on crowdfunding, both Reg CF and Reg A, maybe how they differ, and really what inspired you guys to get involved in the crowdfunding space.
Yeah, to go into the detail from an SEC point of view, probably best for my capital group to kind of go over the nuances, what the limits are. Reg A, I think it's up to $50 million. It's a quasi-public offering. Reg D is private. There's general solicitation. There's, the Reg D C or B. There's all different ways in which it can be done. Crowdfunding is unique, I'd say, in sort of three components, right? One is you can generally solicit, so you can advertise your opportunity. Now, there is a way to do that on a Reg D raise if you file properly for general solicitation, but that's endemic in the Reg CF so that you can advertise. Number two, you don't have to be accredited. You don't have to be a accredited investor. So, if your net worth is, $50,000, you want to invest $500 in a psychedelic or cannabis opportunity, you can do that on a crowdfunding site. You just have to fill out some forms and follow some rules. It's a way in which to go to market to the masses without sort of a traditional method to institutional style investors. So small amounts, generally solicited, and you don't have to be accredited. Those are sort of the three attributes. The collective fund it's great. I've done three of these, and they're a lot of fun.
Let's hold off on the collective because I want to dig deeper on the crowdfunding for now. So on the crowdfunding side, are there particular companies that you find are more successful in the crowdfunding? Obviously, one of the benefits to crowdfunding is you could basically generally solicit both accredited and non-accredited investors, right? So is there a particular type of company that you think has more success than maybe other types of companies?
I think there are a couple things that might foretell success. I think that the presentation has to be highly visual. So if a video can create a clear imagination for the viewer on what the product is and what the investment opportunity is, it's better. So consumer products do well, right? That's why Indiegogo and all these sort of earlier tech platforms did a really good job with consumer facing products, because you as the viewer going on that site, you can imagine you using it. But that doesn't mean that technology, that cannabis, that psychedelics can't be used either. It's just to the extent that you can use video creatively and make it highly visual, that really helps. It has to be easily understood. It's got to be jargon proof.
And when you bring companies onto your platform, are you guys is there certain criteria they need to meet, or are you guys doing any diligence on your end, or is it if a company wants to crowdfund within the cannabis space, they go to Arcview and it's
no, that group is doing diligence to accept for sure. and trying to guide sort of the best practices of campaign creation. But I think, look, it's to that extent, it's not different than any sort of company presenting to investors to raise capital. It is very important to be clear and understood. I mean, look, even when you're doing a presentation, you can't be using jargon. You can't be saying words that are inconsistent with something on a slide prior, because then you get that chin scratch where somebody's looking at a slide, but they're reconciling something that they just heard and it doesn't make sense and it's not logical. So, and I espouse this all the time. You have to be a very consistent and clear communicator. Now, on crowdfunding, it's even exacerbated because you're not in a dialogue. You have a campaign on a page that's speaking for you. So you can't adjust. So companies that can do that can capture viewers' imagination, will do well on crowdfunding. Psychedelic companies can do well. Cannabis companies can do well. They just have to understand these principles to have a successful campaign.
And so we talked about from the company's perspective. So I just want to talk from the investor's perspective. Since you're not having that kind of dialogue, you're really kind of relying on a campaign page to make your assessment. Any kind of pointers for investors that are looking to invest in crowdfunding as far as, how they could try their best to invest like a professional and make sure they're making good investments, certain things that they should be looking for maybe, or any recommendations for investors that are interested in crowdfunding?
The list of how to vet any presenting company, private company for investment, as you well know, is a very long list of team, clear problem space. I will tell you this, just crowdfunding or not crowdfunding, timing is critically important, probably almost more important than team. And I can give a lot of examples of why that's the case and why that's been proven to be the case. Team is also critically important, so I'm not underplaying that. So there's a lot of that, but I mean, I'd say general best practices sort of above the traditional sort of venture mindset or angel investor mindset would be, diversify, right? You don't want to put all of your money on one issuer. Issuer, by the way, for your audience may know, is the term for somebody raising money. We'll just call them companies, or issuers, we'll call them companies. So for companies raising money, or for you investing, you want to make sure you've got some diversification. You don't want to, depending on your personal situation. And that's the beauty of crowdfunding, really, is because you can put small amounts across a lot of different companies. It lends itself properly for diversification.
That's great. And my last question on the crowdfunding, are there any companies you're excited about that are currently on your crowdfunding platform? And if you maybe just talk a little bit about them and how they're approaching the crowdfunding, how much they're raising, what kind of traction they're getting?
Yeah, well, we're new, right? It's taken a while to get this up and running. We've got one company, it's called Budbo. It's a turnkey solution for the cannabis industry, from growers to sellers. It has a sort of a discovery sort of platform, e-commerce platform to buy, to have it delivered, to do in-store pickup, big personalization engine. It has a business intelligence layer for the brands that use it, and has a tracking component to sort of manage the supply chain. And it's also built on the blockchain so that you get sort of this immutable sort of ledger of, how the product is moved through the supply chain to you, the consumer. And, they do a really good job on being well explained on that campaign. That campaign has raised $1.2 million on our platform, which has exceeded our expectation. And, this was our trial, right? There were hiccups along the way. But we learned a lot with this campaign, and I think we're going to be a lot better on the next ones. But it did raise a lot of money, so we're pretty happy, and they're pretty happy about that. But we just look through that lens, which is trying to predict success on which kind of companies can do really, really well on this.
That's great. Yes, raising 7 figures in crowdfunding is very impressive. So that's fantastic. So I want to now pivot away from the crowdfunding and talk about this collective fund, because I remember when you told me about it just a few months ago, I was really impressed about how innovative it was. We manage our own fund, Iter Investments, kind of a traditional structure, 2% management fee, 20% carried interest. Me and my partner Robert were the managers. We have all the decisions on how we want to deploy the capital. But the way you guys are structured is quite different. So I'd like you to kind of dive a little bit deeper into that structure and what are some of the pros and the cons of structuring a fund in this way.
Remind me when I'm done to tell you the con. There's a con, but there are a lot of pros. So first, I'm going to say it is not an angel network. An angel network is a group of guys or women who sit together, companies present, and then it's pass the hat. Dustin, are you in? Yes, I'm in. How much? 25K. Jeff, are you in? Well, I was going to do 50, but now I'm not in. So there's no certainty of capital, and it is just every investor doing it on their own. A traditional fund, like you exactly said, is a managed fund by a GP body, the general partner body, which is usually synonymous with the management company, that says all of the limited partners, the people putting the money up, are passive, and we're making the decisions. We're professionals. We know how to source deals, we know how to vet deals, we know how to fund deals. The member managed fund is the perfect hybrid. So if you're an individual angel investor and you want to be at the table vetting these companies, voting, and having your voice heard, but you don't want to be a go-it-aloner. You don't want to be the only one in a deal. You want some diversification and you want a broader brain. That's what this is for. So here's how it works. This last fund had a minimum 75K unit. So an investor, a limited partner, would buy the unit. And then we would allocate a very small percentage of that amount to the general partner. So all that means is the LP is also a GP. But as you said, investors, GPs get a 2% fee and they get what's called carried interest, which means a percent of the profits. It's traditionally 20% of the profits, right? So what we do for our limited partners, we have 78 of them. They pay a fee to Arcview because Gene and myself are professional managers and we help and we underpin this. But the carried interest, half of it is allocated back to these investors based on what committees they sit on, if they're on the executive committee or an ad hoc due diligence committee. So that incents engagement. So the way it works is we have an evaluation committee that sifts through all of the submissions to our website. On the first Tuesday of the month, we pick 4 companies that we think are the best. We do a Zoom call. We usually have maybe 20 people sort of in that committee that look at the companies. So we pick 2 companies to go forward to a full members meeting, which is on the third Tuesday of the month. They present again a little bit longer, and then we vote on whether we're going to go into a full due diligence process. We ask for participants to do an ad hoc due diligence committee. We aggregate 4 or 5 people. We have an institutional grade investment memo format. They produce a memo. We send it out to the full body for vote. So you do vote, but you're not voting on behalf of your own investment, whether you're putting 25K in. You're voting on behalf of the treasury of the fund. So you're active, but with a safety net. So what we've enabled is access, because we can source better than any one person, right? Education, because I can tell you, we had some people who have never been professional investors and now lead due diligence, right? So access, education, and diversification, right? Because for that 75K minimum, we're going to do probably 25 deals. So yes, you're going to have a smaller amount in each of those deals, but you have diversification across a wide body of deals. And if there's room in deals, we let people come in side by side to put more capital to work. So it's like I said, it's a great hybrid. It's a great community of people. There are science experts, there are marketing experts, and all of everybody's expertise and Rolodex is lended in service to the companies we fund and to their co-investors.
Yeah, it's really interesting. It's one of the things that attracted me to the crowdfunding side was that it was really the form of democratizing investing. And kind of we're seeing this big movement about democratization and decentralization. We saw it with crypto and blockchain. We now see technologies that are trying to decentralize healthcare. So really putting the power back in the hands of the patients to control their own health. And really, I saw crowdfunding as kind of a form of democratizing investing. And as you were explaining how this member managed structure works, it's also kind of another way of democratizing investing within, your LP. So I think it's a very interesting structure. Any particular, are you able to talk about any kind of companies within the portfolio of that fund? Any success stories that you guys have had, maybe even with, where the voting kind of worked out really well, that you had a broad member base casting their vote and giving their opinion?
Yeah, I mean, so cannabis has evolved since we started this thing, so we've evolved with it. We started really just focusing on 6 of the subsectors in the cannabis industry. It's changed a little bit. I would say right now, the fund is focused on defensible positions in the supply chain, which I think is important. Single and dual state operators, tech, and a little bit of science of the plant. And we sort of give you some examples. So a couple examples of defensible positions in the supply chain would be Abstract Labs, which is a terpene research house and provider to cannabis industry to drive sort of consistency from one grow to another, right? Because you want consistency in brand is critical. Source, which is a emulsification company that takes THC and emulsifies it so it can be used in beverages, right? Rather than pick a beverage provider, let's pick a company that can provide to the beverage providers. Blink, which sort of is a sourcing company for vape hardware and technology, so that you can make sure that what you're getting is safe and made with the highest degree of quality. Those are some examples. Single state operators, we invested in a great little company in Massachusetts in the Berkshires called Community Growth Partners. They operate the dispensary called Rebel, Rebelle. It's feminized Rebel. It's a beautiful experience when you walk in. They're now just about to open in Boston, and they just lit up their grow. We think that they're going to do really, really well. Technology, Birchmont Networks, which is a gift card company for the cannabis industry, so that brands and dispensaries can issue gift cards, which is actually a really good business, where you don't have to actually gift cannabis. You can gift a gift card, or a brand can use it promotionally. Complied, which is sort of compliance as a service. Trim, which provides farm management software. So we're pretty diversified. And a number of them are doing really well. Blink had a great year. Abstract Lab had a great year. They're profitable and growing quite a clip.
That's great. And so, now I want to move on to the consulting services that you guys have. So there's a lot of cannabis consultants out there. So how does Arcview, number one, what are some of the consulting services that you offer, and how do you guys distinguish yourself from some of the other cannabis consultants?
I'd say the main 3 areas right now, and I would probably add a 4th, would be license pursuit, helping lots of companies and organizations obtain licenses. Most of that has been done in the tri-state area, but we want to obviously extend that into other regions. Brand expansion, when a cannabis brand wants to expand, where they're licensed in state 1 and they want to move to their 2nd and 3rd state, there's all kinds of best practices, finding the right partners, how to set that up. They do that. Best practices, SOPs, how to best sort of put together a cultivation facility. They do really, really well at that. They're sort of the core offerings. And we've won 3 RFPs to help conceive of what the cannabis program should be. 2 are for a municipality and 1 is for a state. And we're actually bidding on a few others right now. So those are sort of the core practice areas. We also have a real experience for seed providers, just because one of our principals has spent some time in the industry. But those are the practice areas that were sort of topical right now. How do we distinguish ourselves? I mean, I think, consulting businesses are all about the principles and the bench that they can draw into engagements. The bench is strong and the principles are great. One of the principles comes from E&Y, so he's sort of got this sort of big 4 best practices methodology. The other one's been a 15-year cannabis subject matter expert, so they're really a good pair. So that's one of it. The next thing I think is we draw on the Arcview ecosystem, right? I mean, as you know, we've had everybody on our stage over the last 12 years. Our sibling business units help them. The ventures team can help them, sort of look at opportunities and give the investor perspective. The capital group can look and say whether or not they're a candidate for a growth capital raise or not. And just having access to the broader industry, I think, is really what distinguishes that group.
Yeah, I mean, the whole ecosystem approach makes a lot of sense to me. I mean, obviously, when you're investing, you're seeing a lot of deals, which is going to make you a better consulting firm. And when you're consulting for companies, you get to see kind of the nitty gritty, which makes you a better investor, and so on and so forth. So there's kind of these synergies among the ecosystem. But I'd like to ask a little bit more on the team and kind of how the enterprise is managed, because, you want people within silos because you want them to have expertise, but at the same time, you kind of want your consulting arm to have the benefit of some of the perspectives of your investing arm. So I'm just curious, from a management perspective, how do you guys get that collaboration across your multiple divisions?
Well, aside from encouraging them all to pick up the phone often, but no, we do some things. We have a once a week executive call on Tuesdays where we have the leaders of each business unit on the call. And that's really an ask meeting. What do you need? Right. So that's scheduled and that happens. Then once a month, so the fourth Tuesday of the month, we make that an all hands where we invite everybody in and let everybody talk. That honestly goes a long way. Just on what's topical, we have an active Slack channel. So everybody is fairly close and a good channel structure. And then we do something kind of cool once a month on Friday. It's I don't know that we have a name for it, but everybody goes around the room and talks about who they appreciate within the broader Arcview universe, what they've accomplished over the last period of time since the last meeting, and what they're celebrating. And what we found is this is a really good way for people to just connect. And once people connect and understand people as humans, it's a little bit easier to do business with, where they understand somebody's celebrating a kid's college graduation or a wedding or something else that's important in their life. It works. These teams, Dustin, are not that big yet where there's this whole hierarchy. They're really, these four business units are emerging. They're emerging units. So it's not a great sort of structured hierarchy that's kind of in the way of peer-to-peer communication.
Absolutely. And so want to kind of ask some questions. So I know you have this next week, you have this event in Miami and you're having a psychedelic panel, and I'm honored to be moderating that panel. We got some.
Thank you for helping us pull that together.
Absolutely. Happy to do so. Happy to help in any way I can. And really excited that the Arcview team now we're going to be talking, at least exposing your audience to psychedelics. I'm just curious, how are you looking at the psychedelic industry? Does Arcview have a plan to get more involved? Are you just trying to give a little bit of exposure to your cannabis audience on psychedelics, or do you see Arcview's involvement within the psychedelic space expanding?
We do see it expanding. I think our base has expressed an interest to learning about investing in psychedelics. We've been talking about it for a while. I would imagine that we would have moved more aggressively in this direction had it not been for COVID. That said, I think we've done 3 or 4, maybe even 5 panels about psychedelics throughout sort of the COVID period. But our investor base has a significant interest. Look, we're not alone. Benzinga and MJ Biz even did some stuff on psychedelics, right? So you're seeing sort of this traditional cannabis interested channel, whether they be investors or just the curious about psychedelics. Now, psychedelics is a little bit different. There's really less of a ready CPG business around it. And I would argue even not as much of an infrastructure, because it's probably the drug discovery kind of infrastructure. So I think it's really largely drug discovery, which is a sort of a pharma mindset, and then point of treatment, right? Clinical and telehealth. So maybe a little bit even easier to understand, although within the drug discovery side, that's complicated in and of itself. So we're learning, but our ecosystem, by the way, is 65,000 people in our database and 9,000 of which are accredited investors. They're telling us that they're interested. So
Right.
we think we're going to do more. We want to do more. We think our model is uniquely suited. We have to learn a little bit more as a team, and that's why we're thrilled to be partnering with you on that panel, and hopefully maybe some other things in the future.
Absolutely. Well, the industry needs more capital, and we need more companies like Arcview to help us tell the story and get these companies exposures to investors. So, happy to help, and we want to get you guys into the industry in as much of a capacity as we can. I just got a couple more questions. We have a couple Q&A from the audience. If anyone has any questions, now is the time to put them in the box. Just a couple more questions. Your next major milestones, 6, 12, 18 months, what should people be expecting out of Arcview as far as your next milestones?
2022 is really a year of rationalizing the business and I think shifting to an expense light holdco structure, which we've pretty much done, right? We've gotten all of the business operations into the business unit sort of area. 23, I mean, the way that I think about it is really for each division, right? Events, we kind of began in Q4 of 22, right? With New York event, Miami event, but it's really about getting our legs on the relaunch of these events and making sure they're stellar. New York was stellar. I'm hoping Miami's stellar. I suspect it's going to be, and to expand into psychedelics, whether we start with just doing a hybrid for one of our events where it's 1 day psychedelics, or we just do an investor forum in psychedelics alone. That's sort of 2023 for events. For capital, it's really to grow the crowdfunding platform. That's really sort of large in our mind because of the leverage in that. Ventures, we want to put together a second collective fund. We've had some interest in partners to kind of co-launch one of them, and we're thinking about that. And to drive SPV, special purpose vehicle businesses, which are fee bearing to us. Again, we have 9,000 accredited investors, so we can access them. And I would say our consulting is to really expand license pursuit into new states, as well as find other lines of business that are sort of not point in time. And then the sort of marketing services experiment that we're doing was our former CMO, we're sort of exploring whether or not there's room for a marketing services group under the Arcview Ventures, or experimenting. We're doing a few deals under our brand that our former CMO is doing. We want to kind of figure out if we're going to build that as to sort of a formal division. So the goal really in 23 is to get to go or no go on that. So that, it's completing the transition and really getting each of these things to the next level of scale.
Well, yeah, I'm hopeful, and I believe that there's going to be some good opportunity with respect to the licensing side of things. I know New York is opening up. We just had Maryland and Missouri pass adult use. I believe Florida, a lot of people aren't talking about Florida. I believe they're probably going to open up their applications in January. So lots of opportunities on the licensing side. So it's good that you guys are focused on that, want to see growth there. So we are going to jump into the Q&A. We just have a couple questions. If anyone else has any questions, make sure you add them. So from Margaret, how do you source your new investment opportunities? Do the issuers come to you, or do you have an internal A&R style scouts?
Because we are a brand, and because we now again do conferences, and just because we've been known, deal flow in cannabis finds us. And to be fully honest, we are in a world where there's a supply and demand imbalance, capital. There's capital, but there's not enough capital serving the industry. And so because of that supply and demand imbalance, it's honestly, Margaret, not difficult to find deal flow. Question is whether or not you're going to do the right deal flow, right? Whether or not you have the right sort of vetting procedure and way in which to look at deals and get them done. So we don't have any sort of scouts, but think about it, the 78 members of the collective fund are scouts. I would say just 22 of them have background in angel investing and financial services, and another 15 are operators. And the rest are functional business experts, either in consumer research or human resources. So I'd say half of that group are active sourcers.
Got it. And next question we have, this is Margaret reminding me I didn't push you on the
I see it.
collective fund. So
All right.
know what we could do here? I'm going to tell you my perspective as a traditional fund manager on what I believe some of the challenges are. And you could play, you could basically tell me why maybe some of these challenges I shouldn't be so worried about. So, when you talk about members managing, this fund, I get concerned because number one, as me being a manager, I'm able to see so many different companies, and this is my job all day, every day, to look at all these different companies and to make decisions on yes, no, do we want to invest in them? And there's value to kind of me having that control to make those decisions because I have, such a broad perspective. So the idea of having someone have a vote, an LP, who maybe really isn't spending that much time assessing all these different companies, and maybe they're just casting their vote for the sake of saying that they are engaged in doing something, that's one of my concerns. The second concern is the amount of time, additional time it takes. Right now for my fund, it's very simple. Me and my partner, we have discussions, we do diligence, we have pull in team members, we ask for their feedback, we draft up a diligence memo, but ultimately it's me and my partner kind of just very not quickly, but making a decision in an efficient manner. One of my concerns with your style fund is just the time it takes, and the amount of just resources that are required to kind of get everyone engaged and collect that information. So tell me why I'm wrong.
All right, I wrote it down. So you're right and you're wrong. Let's talk about where I think you're right. You're right on, and it's a little even more nuanced than you said, that you guys as GPs, you guys have experience what happens. Well, first of all, it is an issue, but it's manageable. The first thing is the due diligence committee, which is usually staffed by people who have some experience. So if you're doing a committee of 4 or 5, there's 3 people that really have experience and 1 or 2 that are newbies. And the newbies generally volunteer for initially the lighter things like vet the management team, look at their LinkedIn profiles, do backgrounds checks on them, the things that don't require like years of experience to kind of accomplish. So, so that committee writes a memo and makes a recommendation. So voters are not voting on, I wasn't really in that meeting, but it looks good. They're really voting on some real data. Now, that said, the nuance that I don't think you picked up on is you and your partner create a way of thinking because it's only 2 of you. And so that gives you a better filter to look at deals. And you know more quickly what works and what doesn't. That's a lot harder when it's a larger group. But I would tell you this. So that's a real issue. The second issue that's tied to that, which is one you didn't talk about, which is when you're democratizing an investment committee decision, there's a natural gravitational pull to mediocrity. So what do I mean by that? So let's say there are 25 people, there's 10 people in the room. You got 2 companies presenting. You say, score the company 0 to 5. Company 1 presents, everyone says 2.5 points, 25 points total. Company 2 presents, half the room says 0, half says 5. Those are 2 very different companies. Company 1 is mediocre by everybody's measure. Company 2, half the room think this is unbelievable, and half just don't get it. You know this. Company 2 is the one that should go forward, not company 1. So what it takes is leadership. What it takes is the sponsoring team, which is Gene and myself, to guide. And what we found, and again, I've been doing this now for, well, I guess the first one we did in tech was 2010, right? So I've been doing it for 12 years across 3 funds. It self-corrects because the less experienced people will yield to the leadership. They're adults. We've never had the one guy in the room that's the jockey that's sort of trying to assert his view, which is uninformed view. People kind of fall in line because there's enough expertise in the room. But you do have to do work to keep the ship running properly, you want every voice to be heard, because as soon as you shut out a voice, it's not member managed. So you don't want to do that, but you have to lead and give guidance.
Got it. I think this is a good dialogue. We could probably have a whole session going back and forth on this concept, but it's really interesting. And look, I'll tell you, I'm certainly open to the idea of it. And I know you and I are going to have further conversations later. So next question we have says, thanks for the great talk, guys. Jeff, what is the reason why your investors want to invest in the psychedelic market? What do you think the value prop is for VC-backed players versus existing pharma co-players?
I'm not sure I have that answer as to why they want. This has really been us responding to what we're hearing from them in terms of where they'd like to place capital. So I don't know what's in their mind. In my mind is the disruptive nature to the mental health industry that psychedelics can lend itself. As we all know, mental health is, now at the point of an epidemic, further exacerbated by COVID. Horrible advance in traditional medical treatments, Prozac and the SSRIs. I mean, failure, let's face it, probably a lot of data that didn't get properly considered and really don't work very well. So you have a disease state that's growing. You have something that has real evidence, and I would almost argue proof of efficacy for certain cases. And this is a huge, huge opportunity. It's a huge opportunity. And we're thrilled that it's getting in the forefront. So I think our investors see that too. They want to participate. They're individual angels. They don't know a lot. They'd like to be in a member managed fund that's focusing that. And some of them who are just asset allocators that don't want to come to meetings. I didn't actually address your question of time, Justin, and I will. But people that don't want to come to meetings should just find a manager that they want to back that's experienced, like you, Dustin, right? Let me quickly address the time issue. It actually takes less time. You commit to 2 meetings a month for 45 minutes to an hour. And then if you sign up for due diligence, you're probably on 3 other meetings and you participate in a memo. You're going to do a lot more work if it's only you.
All right, I got you. Awesome. Well, that was our last question. Jeff, you survived the hot seat, so congratulations. Last thing is just if anyone wanted to learn more about Arcview, get in touch, maybe see some of these crowdfunding companies, where could people find you? Where could they get in touch? Where could they learn more?
Arcviewgroup.com. From there, you look at the top menu. If you're interested in crowdfunding, go to invest, and you'll navigate your way to the crowdfunding site. And from there, you can also look at, the venture site. There's all our contact information there. And that will tell you everything about what we're doing. We'll talk about, which webinars are coming up. And we'll talk about our live events that we have planned. And you should get everything that you need to know there. And if you have any questions, just info@arcviewgroup.com and somebody will get back to you.
Awesome. Well, thank you so much. And thank you for the audience for attending. Next week, we have Inveric that's going to be on the hot seat. That's Thursday. They really are a company. They got off to the races, raised a lot of capital very early on. And so definitely try to tune in next week. And also just want to reiterate, our parent company is also crowdfunding right now. So to the extent anyone is interested in taking a look at that from a crowdfunding perspective, it is withnucleus.com. That's the website. Once again, withnucleus.com. Thank you all for watching, and I hope everyone has a fantastic week. Thank you, Jeff. Have a good night.
Thank you, Dustin.